79% of S&P 500 companies have reported earnings beats this quarter, according to FactSet, but markets aren't responding in kind. So why do investors seem reluctant to celebrate these wins? Joining us now, we've got Yahoo Finance senior reporter Alexandra Cannell. Hey, Ali.
Hey, Brad, and you're right. We haven't seen the same upward surprises that we've seen in the stock price, despite a lot of these companies beating on earnings. You can look at recent reports from UPS, Apple, PayPal, all beating on earnings, yet those stocks immediately dipped following those results. And because earnings aren't delivering the same stock reactions as they've done in the past, that's bleeding over into some of the major averages and contributing to the stock slumps that we've seen so far this month. You could take a look at the S&P 500. That's up 16% year to date. Yet in the month of August, that's actually down about 3%. Same with the NASDAQ, down about 4% this month, while the Dow has lost roughly 1%. And there are a few things at play here. Number one is the fact that valuations have just skyrocketed in this market relative to the fundamentals. So we've seen a lot of overheated names that are more vulnerable to bad news. Morgan Stanley actually called this a sell the news dynamic for the market more broadly, as investors seem to question how robust the economy is going to be in the second half of the year. You know, if you look at inflation, that has come down, although we took a bit of a pause last week in that CPI print, that Fitch downgrade with the U.S. credit rating that also added to concerns. And we're also not seeing as much, many investors chase the FOMO reaction in stocks. That's something Bank of America pointed out. Remember earlier this year, the AI hype that boomed a lot of those tech stocks. We didn't necessarily see that repeat this time around. And then if you take a look on the revenue side, we're seeing disinflation start to eat into some of those sales numbers. And it's interesting to see that investors seem to care less about earnings beats and are punishing companies that are missing on the top line. So there's a lot of things at play. Very interesting market. I think once we get into Q3 and Q4 results, we'll see how this plays out, especially in terms of the economic data and what comes next with the Fed rate hikes, recession risks, a lot at play on the minds of investors.
Yeah, it's also interesting as we go into retail earnings season, because this is an area where we had not necessarily seen the same pace of inflation. In other words, yes, maybe you were seeing consumer products companies raise prices on non-perishables, for example, but then the retailers weren't necessarily taking the next leg of margin, if that makes sense. In other words, if I'm Campbell Soup, my can of soup might be more, but then is Walmart putting as much on top of that as they normally would? I don't know that was happening with the same kind of cadence, because they wanted to keep that traffic in there.
Yeah, and the health of the consumer, that's always top of mind for investors, for analysts, for stock watchers. And we've seen the consumer continue to spend in this economy. Despite inflation, we've seen confidence in the economy. We've seen spending up. We get those retail sales results tomorrow, and that'll be a key indicator moving forward about the health of the consumer in this market. Whether or not that's sustainable, though, I think is the big question.
Yes, most definitely. And what they're buying in some of these big box retailers on which sides of the store is going to be really interesting also. Ali, thank you so much.
Thank you, guys.
Appreciate it.